Hi, this is Joe Rabil, and I'm very excited to start a new show for StockCharts TV called Stock Talk because we're going to spend the majority of the time talking about individual stocks, and I want to be able to answer your requests. And we're going to basically give you a couple different ways to be able to send in requests in advance of symbols that you want discussed. And I'm going to use my 30 years of experience to give you, basically my read on those stocks. There's a couple of things that I think are important about this segment that I think could be fun. First of all, because I've been doing this for a long time with institutional investors, I spend a decent amount of when I'm doing the analysis, I'm also teaching. A lot of guys when I had that I worked with over the years really wanted to figure out ways to incorporate technical analysis into their fundamental approach. And so I tried to give them the ability to learn on the fly as we talk about individual stocks. I wanted to be able to also teach them as we go. So that's what this segment is going to be about. It's kind of twofold. One is give you the analysis on the stocks you're interested in, and then also teach you maybe how to incorporate it into your own approach. So, I think if you're looking at the market and realizing how difficult it can be, I've worked with so many money managers over the years, and I really feel like the best money managers use both fundamental and technical analysis. They don't use one or the other. And I do suggest for you to come up with an approach, have an approach to the market. I'm going to give you a pretty good framework for the technical side of things. And I think it can be incorporated into pretty much any methodology out there. I wrote a book called Invest Like a Pro, and I think that it was meant to be used in conjunction with a fundamental approach. Now, at the same time, if you don't want to use fundamentals, that's fine too. It's a standalone approach in that I'm looking at multiple time frames, I'm looking at momentum, I'm looking at a lot of different things, and that's going to be a part of sort of the lessons that I give throughout the course of this show. So with that in mind, let's just go to our agenda for today. And the format of the show, I wanted to spend a minute or two on just to give you an idea of what the plan is. Today's format is going to be a little bit different because I want to give you a little bit more of my background and approach to the market. And I also want to show the StockCharts ACP setup that I have. And while I do that, I am going to explain my it's sort of why I use what I use. So I use specific moving averages. I'm going to give you the reasons for that. I'm going to show you MACD, and I'm going to go into ADX, which I use a little bit differently than the average person. We are going to spend the last part of this segment on going through analysis of stocks that I got requests on. So that's sort of the plan at this point for the show today. Let's go ahead and get into what the format is going to be. So for the first 5 to 10 minutes, I'm going to go into technical analysis. Now, that might entail multiple time frames, teaching you how to use more than one time frame at the same time together, and how it's interesting because I think once you understand how to use multiple time frames, it takes you to a whole nother level in terms of your timing and reducing risk. So want to be able to incorporate that into the segments. It will come across when I'm doing the analysis, but at the same time, I think having certain lessons on in the first 5 to 10 minutes, I think can be pretty valuable. I'm also going to talk about trend and trend dynamics. I think price trends are the most important thing, understanding price and price action and all that. And so it's got to be first and foremost in any type of lessons that we do. So that'll be incorporated in on a regular basis. And certainly momentum. I look at MACD and ADX, and so I'm going to get into that a little bit. And then, and also, again, I'm going to talk about the ACP setup and ways that I use ACP, not only for the analysis, but maybe for screening and that sort of thing. And then for the last 20 to 25 minutes of the show, it's just going to be going through the individual stocks that have been requested. Now, while I'm doing that, I think you got to realize that that is going to be where a lot of the learning is going to come from, because again, I'm going to incorporate a lot of my analysis. I'm not going to just say buy, sell, or hold, as I said. I'm going to be more inclined to give you a lot of detail as to what I'm looking at. I've been doing this for a while, and I've recently started doing it for individual investors, and the response I've been getting has been very, very good. They seem to think that it's a great way for them to both learn what stocks look attractive or not attractive, but also how to sort of adapt and learn these different strategies on the fly. So that's kind of how we want to do this in terms of the format for the show. Just to give you a little bit more background on me, so just to give you an idea, like about almost 30 years, I guess it was more like 25 years ago, I was working with a client who actually just recently retired. So I worked with him for about 25 years, and he was asking me about a specific stock, and this goes back 25 years. So he would call me on a regular basis, and he would say, hey, what do you think of this? And what do you think of that? And almost every one of those stocks did not really look very good. And they all look like breakdowns. And at that time, I was using a daily chart with a 20, 50, and 200 day on it, and that was it. And I looked at MACD back then, and I had volume. I had a money flow and stuff like that. So, the key thing I wanted to get across here is that he's asking me these questions, and all these stocks kept on looking terrible to me. And he was one of the top performing small cap managers at the time. And he loved my analysis because I was giving him kind of where the key support was. And he kept calling back, even though I'd say, you know what, this stock looks awful at this level. And so he'd say, well, where is support? And I'd give him where support is. And so he found it to be really, really useful. It started to bother me because I noticed a lot of the stocks were turning around on a dime and taking off. And I'm kind of thinking, what am I doing wrong in my analysis that I'm missing this? He's seeing something that I'm not seeing. And so I started looking at other charts. I looked at a weekly chart, and then I looked at a monthly chart. And lo and behold, when I pulled up a monthly chart, it started to dawn on me why he found these stocks so attractive. And it altered the technical picture for me to such a significant level that I started studying multiple time frames and figuring out, okay, I'm going to look at a daily chart, but I also want to look at a weekly chart, and I want to look at a monthly chart. And what I don't want to do is whip people around. I don't like to say buy one week and then sell the next. So that was sort of my goal. Again, 25 years ago, I started on this path where I started looking at longer term time frames, and I found it to be really pretty helpful. And so, if you think about it on a single time frame, and let's just say we're looking at a weekly chart, if I look at the trend, which is the price trend, and I'm looking at the price structure and the moving averages, and then if I look at the momentum on a single time frame, which is the MACD, and actually the MAs can really help with momentum. I'm going to show you how I use a buddy system for the MAs to really show how strong the momentum is in a single time frame. And then we look at MACD and we look at ADX. And just to make a point here, again, price is king for me. Price and volume take precedence over everything else. But using MACD and ADX as supporting roles can be hugely helpful, especially when you're looking to do screening. And so we'll get into that as time goes on, and I'll show you how I would incorporate that to save you time so you don't have to go through 5,000 stocks. You could maybe run a screen to narrow that list down to say 100 or 200 or something like that. The longevity of the trend for me has more to do with where was the last... Where did the signals start? Meaning, if you've had 2 or 3 signals in a row, where was it the last time you had a real correction or a real breakdown? And that tells you how long this trend has been intact. I'll show you how I do that with the moving averages. and it makes it pretty simple. But you can do it in a number of different ways. I do it with swing charts as well. These are some of the things that we'll be talking about in the coming weeks. And then obviously I look at relative strength. Now I use relative strength a little bit differently in that I'm not necessarily always looking for the 99s in the relative strength. A lot of times I'm looking for ones that are shifting their trend. Maybe they've been underperformers and now all of a sudden they're starting to emerge. And so that type of relative strength is something that I'm always on the lookout for. So as we go through, I wanted to make sure I covered this and give you a little bit more background into why I think this is a really good show for me, because this is what I've been doing for so long, and it comes pretty naturally, and it's really a lot of fun. So we want to be able to make this fun for you guys, and I hope that you find it not only useful in terms of learning about what stocks, about your stocks, but also how to maybe incorporate it into your own methodology. So let's get into the my setup in StockCharts ACP. So here's my setup for ACP. I have 4 time frames up. Monthly is in the bottom left. Weekly is in the bottom right. I've got a daily in the upper right and a hourly in the upper left. The reason why I do that is I like to look at a monthly chart and a weekly chart side by side. And when I'm looking at like longer term time frame, I can just look at the bottom 2 charts and get a really good feel for what's going on in the bigger picture. And then if I want to look at more of an intermediate term look, then I can look at the weekly chart at the bottom and a daily chart above it. And so I can look at these 2 together from that standpoint. If I'm looking at a more of a shorter term time horizon, then I'll use the daily chart together with the hourly chart this way. It just makes for, it flows easier for me. I've gotten used to it. If you're using a different approach to the 4, like a grid like this, then stick with it. I do recommend just sticking with whatever you're using. But if you don't have a grid setup yet, I think this is a really good format to start with. So if you go over on this left side for ACP, you can create your layout over here. Again, I have it set up with 4 equal size charts. You print in the number of charts and all that. The other thing is that they created a expert template with my name here. So if you click on that, I have it set up as a weekly. It's going to pull in all of my indicators, and then you can just switch it over to whatever time frame you want. So I just switched that to a monthly. And so now I've got, again, my 4 time frames up. I like to look at a monthly chart with about 10 years of history. The weekly, I like to look at about 2.5 years approximately. For a daily chart, I like to look at about 6 months. And then for an hourly, usually about 15 days, I like to look at that kind of history. So I've got so if we just look at a weekly chart and I expand this, I've got a 18 MA and a 40 MA on every one of the time frames. And they're simple moving averages. And I'll just say right now, if you want to use a 20 MA instead of an 18, it's totally fine. I mean, there's really not a big difference between the 2. I got used to looking at the 18 years ago, and I've just stuck with it. I do like the 40 to be used in conjunction with either the 18 or the 20 as sort of a buddy system. And I'll get into more of that in more detail as time goes on. But a lot of times if you look at the pattern, look at the trend of the 18 and the trend of the 40, and if they're moving up at about the same rate, then you're usually in a pretty strong trending environment. And I like to look for pullbacks when that's the case. So it's just nice to have that in place. Now I look at a standard MACD. The 0 line is critical for me, so I always have the histogram up because I want to see where the MACD is in relation to its 0 line, and I like to look for reversals at the 0 line. Again, I'll get into more details with that over time. And then ADX I use a little bit differently. The standard MACD is a 1414. Now again, if you pull in my chart, you're going to get this 13.8 version, and I like to use the 13.8 because the 13s are the DI lines. So 13 means it's really just looking at the last 13 days or weeks in this case for a DI line. So the green DI would be representing the strength of the buyers. The red DI represents the strength of the sellers. And then the blue line is the difference between the two. Now, the difference between the two is at an 8 average as opposed to a 13. So it's going to give you much more peaks and valleys in this blue line. And I really like to compare previous peaks and previous valleys in price with the ADX. So that's why I like to use an 8 on the ADX so I can get more, it's easier to compare. The 1414 standard version out there that if you pull it up and you get that, you're not going to get as many signals, not as many peaks and valleys in the ADX line itself. And I just think this makes, and I'll show you over time why I think this is a kind of a valuable tool from that standpoint. And then of course I have volume at the bottom. So that is kind of the setup I've got in terms of, the 4 time frames, and I've, along with the indicators. Now, I want to make mention that I also, so the nice thing about ACP is you can just open up a different tab in your browser, and I've done that here. So I'm just clicking on a different tab in my browser, and I just switch. So now I have the monthly chart, the weekly chart, the same as I just described, the daily chart, the same as I just described. But in the upper left-hand corner, I now have a weekly chart with a little bit more history, normally like 4 or 5 years. And I have only an 18 MA. Actually, what I've done is I've created an 18 MA, and then I've put a 72 week here. And that represents, and it does a very good job of mimicking what is taking place on the 18-month line. It's not exact, but it's very, very close. I've done this for years, and I like to use the weekly chart this way. And the reason is I like to get an extra indicator in, and that's the relative strength, because I want to see the trend of the relative strength. I don't want to just get a number. Not to say that the number is not important, but I do want to I want to see what the trend of the relative strength has been doing and if it's reversing, because that is a nice confirmation if we see what's taking place here right in this area right here. Notice how the relative strength was in a pretty strong downtrend, and now we're breaking that downtrend, and that was right where price was crossing back above its 18-month line, and where the 18-week was crossing above the 18-month. So it's nice to have that confirmation. I like to look at the indicators, but I do like to look at to see what relative strength is doing. And obviously the main reason for that is that if a stock is moving up, I want to know if it's doing it based on its own merit, or is it being pulled up? Is it being pulled up by the group? Or is it just being pulled up by the market? And so anyway, I think this can be pretty valuable from that standpoint. So if we look at it in these terms, another thing that I like that I think is valuable, and some people don't like looking at multiple time frames, so I'm going to give you sort of a way to look at multiple time frames without doing it, with having one chart up. And that is, since I have this 72 week, which is mimicking the 18-month line, and I've got the 18 week up here, now I have 2 different time frames. Because the one thing I wanted to make sure you understand is while I use an 18 and the 40 together sort of as a buddy system, the 18 is really the driver for my approach in each time frame. The 18 tells me basically the trend in each time frame. And again, if you want to use the 20, go ahead and use the 20. I think the 20 does a very good job of representing the trend in any given time frame. It also tells you if you're getting overbought or oversold by how far away you're getting from that line, above it or below it. And so again, I would use the 18 or the somewhere 18, 20, 21, something like that, to represent this time moving average that I think is pretty valuable. It gives a lot of valuable information that I'm going to be covering in the coming weeks. So this is a good setup, having these 4 charts up. If you want to look at a shorter term time frame, I just have another tab set up if I want to look at the hourly, which when the market gets volatile, the hourly becomes very valuable. So I always keep an extra tab up if something is moving at a pretty rapid pace, or something like Tesla, or Bitcoin, and you want to look at some more information, some more price action, then you have the ability to do that looking at a different tab. So I like this. I like this approach. I think this is a good setup. We're going to go into some analysis now. I'm going to pull up some stocks that I think that have been requested, and we'll get into some more analysis. Let's go ahead and look at some stocks now. I'm going to change this setup a little bit. I want to expand this, make it full screen, and I'm even going to move this over. So now we just have really the charts up, and we can really focus in. I'm going to pull up the first stock here, Hive Blockchain. And I do want to look at the monthly chart real quick. If you notice, we made a big spike back in 2017, got really stretched away from the 18-month line. And it was a sort of a climatic reversal there, and now we've worked our way back down. In this case, we are making another big move. It doesn't look quite as climatic, but it has sort of similar qualities because it got pretty far away from the 18-month line again. And while you didn't have a 1-month reversal, it kind of took place over a 2-month period, and we have come down pretty hard. I want to zero in on the weekly chart here because a few things took place here. If we look at how this broke out and took off, made a really nice run and then consolidated and then made another really nice run. And if we notice, this bar is the biggest bar on the chart, this green bar. And I'm going to talk a lot about big green bars and big red bars and how important they are to me. And if we get a big red bar after a run to the upside, that's usually a sign of some type of climatic activity. It's usually a pretty good opportunity to do some selling. In this case, because this has made such a significant run, it was actually a pretty good exit point. But I think it's just important to recognize that big bars at the start of a move, like a big green bar at the beginning of a move, is actually very, very bullish and probably is igniting a move to the upside. But after a run has taken place and we get a big bar, that's more of an exhaustion signal. So anyway, now we're sitting back. And the reason why I think this is relevant about being exhausted is that a lot of times when you get climatic moves to the downside, it takes a little bit of time. You need to be a little bit more patient, especially after we've broken the 18-week line, which is now rolling over. I think the key level to watch is this 2.5 mark. The 30,000 mark on Bitcoin is important. And, I think if we break that, then we're in for a much longer period of consolidation. Right now, I'd sort of be of the opinion we're going to consolidate in here and sort of form a range unless we can't hold the 2.5 mark. Also note how MACD has not made it back down to the zero line after a big move like that and getting far away. I think a lot of times you should expect this to spend more time going through a consolidation and allowing this to come all the way back down to the zero line. Let's get into the next stock. I know I'm taking a little bit more time on these. I don't have as many stock requests this week, and I'm hoping that'll change. And we'll get through more symbols certainly in the next segment. Let's look at this NVTA. Similar quality in that it had a big move on the monthly chart that got away from the 18-month line and then corrected back down, and we overran the 18-month in this situation. So sort of a climatic look, and then we've pulled back. But the difference is in this situation, we're actually breaking the 18-month line, and that bothers me a little bit. The other thing that I would mention is look at how MACD has overrun the zero line on this chart, whereas on the Hive we hadn't even gotten back to the zero line. This one's actually overrun that, and ADX, this move here, this blue line, was strong based on the buying strength, the green DI, and now we've had a sell-off to the downside, and the red DI has taken over. And notice how red, the blue ADX line is showing strength based on the selling. So that tells me we have to be patient here. This is pretty strong selling strength in this move. And I want to make sure this is going to hold the 25 to 30 area before we would step in. So I'm looking for a lot more confirmation based on the selling strength of the red DI or the sellers here. Let's look at the next stock. Lemonade. Not as much history here, and even though, so we broke the 18-week line, and that's starting to roll over a little. I mean, that has rolled over, and we're trying to push back through that. MACD is not back through its signal line or the zero line, so we got to be a little bit more cautious here. And what that would tell me is that I really want to see. I want to see the break of this downtrend line, which we've seen. Now we're getting somewhat of a test. I want to see a full 1, 2, 3 change in trend. The 1 being the break of the trend line, the 2 being some test of support or preferably the low, but in a lot of cases you only get a retrace back to the moving averages, but then we want to see a move back up through this high. That would be sort of a 1, 2, 3 change in trend, and it would make this a lot more attractive in my eyes based on what's going on the weekly. So a lot of times I'll be a little bit more aggressive on the lower time frame if I like what's going on the higher time frame. But in this situation, because the weekly really isn't in all that great a shape yet, I want to give a little bit more confirmation. I'm going to talk a lot about this 1, 2, 3 change in trend and how I use that in multiple time frames. So I just want to make sure I covered that for a brief moment. Let's look at PINS, Pinterest. I kind of like the way, so this is well above the 18-month line. We don't have a lot of history on this chart, but we show really good strength to the upside, and then not really climatic activity, just sort of a pullback that's developed. Look at the weekly chart. The difference here is we showed really good strength on the ADX on the way up. Now we've had a decline phase, and ADX is really low, and red DI can't really even hold above 25. This is nowhere near the selling strength that we were just talking about. Also note how MACD has worked its way back closer to 0. So this is a little bit more attractive to me in the way that it is setting up. I still think because we have a declining 18-week, that we're probably going to spend some time consolidating here. I don't know that I would try and buy this first break back above the 18-week. I think we're going to end up consolidating a little bit more. Maybe MACD's got to spend a little bit more time cupping around or making a double bottom. But I like this pattern in terms of the way it's setting up. It looks like there's a pretty good support underneath. Next stock, PLUG. Again, a lot of similar characteristics in the requests that I got this week. And so if you notice, look at the climatic activity on the monthly. Massive run to the upside. We started with a big green bar here, which was the biggest bar we had seen in years. And then it took off. We got a pretty big bar. Look at the size of that bar after a big run. I mean, that's telling you want to be selling, doing some selling when you see something like that. Now, again, because it was somewhat climatic, I don't think you want to be jumping right in this. It's coming back into support. Let's look at this on this time frame. So on this chart, we've got a monthly 18 rising underneath, and we've got an 18-week rolling over on top. So I think this is going to bounce around between these two. I think ultimately the 18-month line will win out, and we'll probably get through the 18-week, but it's going to take some time. And again, I wouldn't be in a big rush to be a buyer until we saw a little bit more stable action taking place in this stock. So that's kind of running out of time for this segment. I want to make sure I cover this last part, which is how to send in your symbol requests. First of all, my contact information, you can get my information on rabilstockresearch.com. And next week, I'll be giving you a lot more information as to how people who are watching this show are going to get a good deal on for a trial to check out my research. Also, my email is joe@rabilstockresearch.com. You can contact me on LinkedIn. But also make sure you send your symbol requests to stocktalk@stockcharts.com, or you can put it in the comment area on YouTube. So anyway, have a great trading day, and we'll see you next time.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.